Welcome back, everyone. Our guest for today is Jay. He has spent more than 20 years building tech products at major companies, then walked away from the corporate life in 2025. So, Jay, let's learn a little bit about you and your background.
Sure. Well, thank you, Mihir. As you rightly said, I'm Jay. I worked in tech for 20 plus years. I've worked in all kind of companies from the largest like Amazon and to my own small startup. I've been through the entire spectrum. Like most of your listeners, I also was born and raised in India. When did my undergrad in computer science, came to America more than 2 decades ago with this American dream, landed in the land of opportunities, built my entire career, got married, had kids and whatnot. So life has been super rewarding. For last 20 plus years, I've spent most of my time building high tech products, working in tech companies, both on the engineering and the product side. In between, I was also an entrepreneur. For last couple of years, I was going through this in my head. How long do I want to do this? Is this forever, or do I want to do something else? And as our kids are getting older, we were thinking about like, what is the second phase of our life? We don't want to be in this corporate grind forever. So I basically took the plunge in November 2025, walked away from my corporate job, took a couple of months break completely to refresh myself and really think about what have I learned, what mistakes I've made, and how I'm going to progress forward. And now I am building two businesses, helping out one for my wife, another one I'm doing with my daughter. With my wife, we essentially run a real estate consulting, specifically focused on global sovereignty, and we can dig into this part.
Nice.
And one of the location that we focus on is Dubai. I know right now it's not in the best of the picture due to the
Yeah.
unrest in the Middle East, but I think Dubai will come out much, much, much stronger from this than it ever was. So I'm not too worried. So that's in a nutshell about me. I'm happy to dig into any part that you want to.
So, like, when did good career, good money? I know you have been in this industry for so long, right? So, when did that stop feeling like enough for you?
I think money is never enough, to be honest. There's this whole idea of knowing what do you really want, and my perspective on money is somewhat different than a lot of people. Like a lot of people work from a number. If I had X crores, I'll be okay. That's a fallacy in my mind, and the reason it's a fallacy is that's a moving goalpost. When you reach 1 crore, your goal moves to 2. When you reach 2, your goal moves to 3, 5, 10, 20, 30. And you go to Reddit and other places, people are throwing all kind of numbers. Right. I would rather say start from what kind of life do I want? Like when I define my ideal life, then basically work, what do I need to afford this life? I'm not chasing a number, I'm chasing a life.
Let's say you had a big tech career, maybe in your 35, when you're 40, you want to try retiring. But then whatever idea they have of life that they want to live right now is going to be the same, let's say 10 years, 15 years from now. Because like you said, 1 crore, 2 crores is not enough. Then how do you know that the lifestyle that you want is going to be enough for the rest of your life?
Yeah. So the funny thing is, again, I'm not talking about anybody thinking of I'm going to fire in my early 30s, right? Somebody who's in mid 40s, like 40, mid 40s, when you already are at peak of your life, you already have kids, you're married, you have parents and whatnot, your family isn't growing anymore, right? From that point on, if you look 10 years out, and say, let's say, I don't know your situation, but like 10 years ago when my kids were younger, I would have imagined I want a place where the kids have freedom to run around. They would have their own rooms. When the time needs, we can have our own space. The kids can have their own space, but this is not, it's large enough for that mobility, but it's small enough for us to be able to see each other every day.
Right.
Once we defined that, it was much easier because we know now we are at a stage of life when our older one is already in college. Our younger one goes to college next year.
Right.
So we are only going to downsize from here. There is no growing from here. There's only downsizing from here, right? So we are at the peak of what we want. Sure, I probably would want more travel for 10 years, but I won't be traveling 25 years from now.
Right.
So there's this whole idea of there is a peak and then expenses start declining.
Right.
Like I can tell you from my own experience, when I was in 20s, I fancied, nice cars and whatnot. I don't give a damn anymore.
Mm.
I'm happy driving a Honda or a Toyota. And
Right.
actually, that's what I drive today.
Mm.
Whereas 15 years ago, when I was in my early 30s, I had a BMW.
Mm.
I made that mistake, learned my lesson. Job of car is to take you from one place to another place. Forget it.
Right.
So the point here is you have to realize what is that the peak of your life.
Mm.
Sure, everybody wants to be an Ambani, but how many of you will be?
Right.
Right. So
And
I
then
think
you do
that's the
like
more
a
important part.
back calculation from there, saying, okay, this is going to be what my peak will look like. And from there, it's going to be kind of a downward journey where I've figured out that these are my wants, these are my needs, and this is how my life is going to be for the next 30, 35, 40 years that I'm going to stay.
Yeah. Yeah. So the other way to think about this is, let's say somebody wants to retire in India,
Mm.
right? You could be a mountain person, you could be a beach person, you could be a city person. You pick what you want, right? Let's say you are a beach person and you say, okay, I want to retire in Goa, right? In Goa, I would want to have a 3-bedroom apartment to live where, if I'm retiring with younger kids, they're with me, but eventually they'll go out with me and my wife, right? That's it. And what does it cost today? Pick up the nicest area, like pick up
Mm.
the nicest things that you can fancy. I'm not one of those penny pinchers. I don't want anybody to say, oh, because I want to retire early, I'm going to cut everything,
Mm.
right? Define the ideal dream life you want.
Mm.
Aim for that, not for a money goal.
And then you
And that
plan
goal is
your
very different for everybody.
expenses according to that goal.
Yes. In my mind, it's all goal based, right?
Right.
If you make money your goal, that
Mm.
goal is never enough. That goal is never accomplished,
Right.
right? Because your desires keep changing, right? Earlier you were taking domestic vacations, your income increased, you
Mm.
want to take international vacations, you were traveling economy first, now you want to go in business class, right? Earlier you were staying in budget hotels, now you want to stay in 5 stars. Things don't end.
Right.
Define what your ideal life is. And the most important part here I would say is be on the same page with your partner.
Right.
That's the most important.
Yeah, I think I wanted to talk about that maybe at the end, talk about family and other things. So I think we'll start off with like, I know you've achieved financial independence. So what part of fire is math and what part of it is actually psychology?
A big part is psychology. Again, as I was saying earlier, right? Defining what you want is psychology. And I don't know if people have read some Psychology of Money by Morgan Housel. He very recently came out with another book called Art of Spending Money.
Yeah, I saw that.
Right. So I've read both of them multiple times. He also has a third book, same as ever.
Hmm.
But these two books are specific related to money.
Right.
And one thing he talks in Art of Spending Money, which basically resonated with me, kind of aligned with how I was thinking about stuff, was he said, imagine that you are living on a remote island with your family and there's nobody seeing you. Nobody. And then define what your life is.
Hmm.
Because that's the life you want. Everything else we end up doing because we want to show it to somebody else. A lot of people don't buy fancy cars because they want it. They
Right.
buy fancy cars because they think when people look them in the fancy cars,
Hmm.
they will look of them differently. But reality is when people look at somebody in a fancy car, they're looking at the car, not at the person.
Okay. So in a couple of your interviews, I've seen you said that financial independence is not just about saving money, right? It's more about building a life you actually want to live. So what does that look like in practice though?
So for me, like as you were talking backstage, financial independence comes hand in hand. Financial independence in my mind is there is a freedom to do what you want, when you want, with whoever you want. For an example, if I want to go out for lunch on a Wednesday with my wife, I shouldn't be looking at my calendar saying, oh, I have this meeting. Oh, let me ask my boss. Oh, it's, we impromptu, we just decided we want to go out for a coffee. Or, oh, you know what, there is this nice, theater that there's a show there we want to go, but it happens on Thursday at 1 p.m. Sure.
Right.
Right. Like that's the true definition. Financial independence is not about how much money.
Mm,
It's the independence of doing what you want to do, not what you have to do.
mm,
Subtle difference in words, but it's a very profound difference once you understand it.
mm,
Lot of people that I have come across and met in my career and my life, they are in the professions and the careers because that gives them the paycheck,
mm.
not because they want to be in that profession. That's
Right.
the truth, hard truth.
So I want to get into your investing philosophy as well a little bit, right? I know you are big into Bitcoin, into AI. So can you talk us a little bit about, like, did that come from the start? Because Bitcoin was not there maybe when you started investing, right? But what was that journey like? When did you think about FIRE, and when did that turn kind of into a thought that, okay, this is something that I want to really do?
So, unlike a lot of people, I'm not a big time, like old time fire pursuant now, right? I came across fire during the COVID time or like right before that time, like 2019 or 2020 something. That said, in my mind, the definition of fire is not retiring early. In my mind, when I look at the re of fire, I think of it as recreationally employed.
Mm,
And not as in I am just killing my time as a barista. Maybe for some people that might be the goal, but for me, it's like I wanted to spend time with my family to help out with the things that they wanted to do. Now I can. Really, I didn't have time because I was in meetings from 8 to 6, and by the time I came out, I was drained. I had no energy, no mental capacity to think about anything. So that, in my mind, is the fire definition. So I was thinking about this for a very long time, for last 5 6 years. The only thing that was holding me was I didn't want to leave a job. I wanted to get into the new chapter, and I wasn't sure what the new chapter was.
mm.
I didn't want to just quit my job, sit home, binge watch Netflix.
Right.
That's not what I wanted to do.
Not even a little bit at the start. Because that's what
So,
I've seen a lot of stories where they say, okay, I retired, and then I did all of these things, binged watched this, did that for 6 7 months, and then I realized, okay, this is not something that's sustainable for the long term, and then I started thinking about what I want to do next.
yeah. So, sure, I took a couple of months break too. But the point I'm trying to make here is like one of my early mentors suggested this to me: always run towards something, don't run from something. So I wanted to be sure what I'm retiring to because it was always clear what I'm retiring from, right? So that clarity was super important. And I got that clarity over last, 12, 18 months. So I basically phased it out. And eventually I found like end of last year was the right time. Now you talked about the investing philosophy.
Hmm.
I wasn't a very informed investor from the early stages. Like many
Hmm.
of us who were born in India, majority of our parents were never into investing.
Right.
The best they were ever did was bought a piece of land or bought some gold, and that was it.
Yeah, maybe some LIC insurance policy and those kind of
Yeah,
things.
the biggest scams of the world.
Yeah.
But one thing that was very clear to me from very early stages, which was like my dad was a government servant, so
Hmm.
he had a pension when he retired. I knew I'm in a corporate job. There
Right.
is no pension waiting for me on the other side.
Right.
And in very early parts of my career, I saw, big downfalls, big declines. Like I saw global financial crisis.
Hmm.
I was coming into workforce when 9/11 happened and all that stuff happened, right? So that between 2000 and 2008, 9, there was so much disruption. So
Right.
I saw layoffs, firings happening very early on in my life. So I knew that there is no guarantee of the job. So I took that very close to my heart, and I was maximizing my case from the day I started getting my paycheck in the US, from that day on.
Hmm.
But that was my only thing. Like for the longest time, I didn't even know where my money was parked.
Mm.
It was parked in target date funds. That was a default that Fidelity does and whatnot. And I
Right.
had no idea what target date funds were. Like, fine, it's doing something good.
Right.
I was not doing any investments. Then I slowly starting, coming to know other people that shared information. I started doing a little bit of investing here and there. But the biggest mistakes I made on that path was anytime there was big expense,
Mm.
oh, we are buying a house, you need to make a down payment.
Mm.
Sell everything, put it here.
Right.
Oh, I'm doing an MBA, I have to pay fee. Sell investments, put the money here.
Right.
Something else come, we are going for a vacation, we need 20 grand.
Mm.
Sell everything. So we made those mistakes plenty of times.
Mm.
Plenty of times.
Mm.
It was not until like 2015, 2016 when I basically started wrapping my head around money needs time to work. You
Mm.
can't put money and look at it in 6 months, 12 months later and say, oh, what did it do for me?
Right.
Right. That was the key learning. And that's when I started digging more. I learned about all of this thing like buy, borrow, die strategy, power of compounding, everything that comes along came after that.
Right.
But the best thing was I never touched my 401k. I still haven't, and I still can't touch for another 15 plus years.
But that brings me to an interesting point, right? Like you're saying between 2015 and 2025 is when you retired, right? So in a span of 10 years, you were able to actually go from, let's say, no aim in life for financially to become financially independent, right? That's crazy for me.
Yep. So this is where the seriousness came. So
Mm.
good thing that comes alongside of that was my career was doing very well. So through those last 10, 15, 10, 12 years, only my like markets did very well, but my income did very well.
Right.
And because the learnings came, I was able to divert more money towards investments and not touch it
Mm.
than I was ever able to do before.
Right.
Right. So the key thing here is, and this is what I've been teaching my kids off lately, is no education system in the world teaches you what to do with money when you have a little.
Right.
Nobody, no country, no school, no university, they don't teach that.
Mm.
In on top, our society is kind of, you know, groomed in a way that they push you towards spending.
Mm.
As they funnily say, when you go ahead and buy a $100,000 car
Mm.
and take a $2,500 installment on that, people
Mm.
think you're doing very well. But if you put like $2,000 toward S&P 500
Right.
or Nifty 50, people think you're stupid. Like, what's gonna that do?
Yeah.
People don't realize that power of compounding is a real thing.
So how did your investments change the philosophy that you had, right? When like, you were starting out in 2015, 2016 versus when you retired in 2025, right? Like two things I want to know is one is how did the investment philosophies change? And the second is how did that look like from a numbers point of view, right? From your asset allocation and things like that. What changed in these span of 10 years?
I think the philosophy changed that I was very clear any money that I'm putting in is not going to come out anytime soon. Right. So I was basically starting to think in, okay, what are my goals? The goals are my daughter has to go to college, my son has to go to college.
Mhm.
Right. Then when we retire, we have to find a retirement home and we'll have to sell our primary home and then we have to retire. And in retirement, we need to travel. So I was thinking in goals like that.
Mm.
So the goals and any money that was put towards a longer term goal would stick there for longer term. So you can like
Right.
in fire terminology, they say the bucket strategy. I don't
Mm.
call it specifically bucket strategy.
Right.
In my mind, I'm tying it to goals. So any money that I've tied for my retirement, which is let's say 20 plus years away, I'm not going to touch that money for 20 plus years.
Mm.
So my retirement accounts, they're locked.
Okay. So they are sorted
Even
out.
if
So that one goal is taken care of. And that clarity was there from 2015.
like as I started building my philosophy there, that was the first thing I realized. Okay, you
Okay.
know what? This is how I'm gonna think. I'm going to keep a little bit of money for me for the emergency stuff. Again, I'm not a big proponent. People say 1 year, 2 year, 3 years. I
Right.
don't keep that much cash because once your portfolio is at a certain level, you can always generate cash if you need. There are many ways, right? And especially living in America, you have credit cards. If you have
Mm.
urgent need, like if you are have to go tonight somewhere and you have to
Right.
spend $20,000, you can.
Right.
And you can tomorrow, day after tomorrow, or you have like 30 days on the card to generate the cash,
Right.
which you can,
Right.
right? So that was the thing. Mm, I was not a stock picker. I'm
Mm.
not a stock picker. I don't want to be a stock picker. I burnt my
Right.
hands, tried there, not good with it. Stopped it. I'm big time. I was big time index fund investor. Majority of
Mm.
my funds still stay in index funds. I'm
Mm.
not a gold investor.
Mm.
I don't believe in gold for many different reasons, and we can talk about it if you're interested.
Mm.
I don't believe in bonds. I know there are people who basically say there are bonds that help. I've replaced the bonds with real estate.
Yeah, I think that's interesting, right? Let's get into the
Yeah.
gold plus the bonds part. I think that is
Yeah.
something pretty interesting.
Yeah. So gold has many issues. Let's start with gold, right? Gold, in my mind, has only two use. One is the industrial use. It gets used in some industries. Very good. We should
Mm.
continue using it. Second is jewelry, ornaments. Sure, if your wife wants to have gold bangles or a gold chain, by all means. Buying a gold bar
Mm.
and putting it in a safe and holding it is stupid.
Mm.
Now, why is it stupid? Somebody looking at this will say, oh, gold has done so well in 2 hours. Or sorry, last two
Yeah,
years, sorry.
last 2 years,
Right?
I mean, the gold rally has been
But
amazing.
what has gold done in last 20 years, right? Gold, like, again, I don't know the Indian rupee prices very fresh, but I know dollar prices. I'll give you correct examples and people can check this data. 2011, gold touched about 18 or $1,900 an ounce. An ounce is 31.1 grams,
Mm.
right? And
Right.
then it fell to 1,200 an ounce.
Mm.
It took more than 10 years to break 1,900. Sure, it's over $5,000 today. But if you were sitting on that for 10 years, would you
Mm.
still hold it?
Mm.
First thing, right? The
Right.
second issue with that is this safety and security.
Mm.
In a place like India or even in the US, right? If somebody knows Mahir has 5 gold bars in his house,
Mm.
what's happening next? A group of mobsters will show up at your door with guns and and everything else, and they'll take the gold from you.
Right. So physical gold, I understand, but like, what about ETFs and things like that? Like, there are a lot of options these days.
Okay, you're opening a can of worms there,
Okay.
right? If you don't want to buy physical gold, why buy gold then, right? So ETFs, you don't have claim on physical gold. The purpose of gold always has been as an inflation hedge,
Mm.
right?
Right.
If you hold a paper,
Mm.
what do you hold? And I don't know how many people know it, but if you look at the data, you'll
Mm.
find out in gold and silver,
Mm.
depending on what data you use, the claims are 1:30 to 1:100. For 1 ounce of gold or one
Mm.
ounce of silver, there could be 3,200 claims that this is mine. Do what you'll do with this information, right? So if you want to invest in an ETF,
Mm.
freaking buy S&P 500 and chill. The third issue with gold is, let's say, people in Middle East right now, when this unrest started, people wanted to leave
Mm.
overnight. You can leave, you can liquidate your brokerage account later and wire the money.
Mm.
How will you take your gold?
Mm.
If anybody has any doubts, no matter where you are in the world, try taking 200, 500 grams of gold with you. I'm
Mm.
not even talking about kilograms, right?
Mm.
Just try taking out through an airport and see what happens,
Right.
right? So mobility isn't there.
Mm.
Safety isn't there.
Mm.
It does very well in certain periods, but does
Mm.
absolutely nothing in others.
Mm.
Then what's the point? And the most important thing is selling gold is so hard.
Mm.
It's so hard. It's not like you have SPY, you can log into your Robinhood tomorrow and basically say, okay, I want to sell one share of SPY. And you get the exact market price of the mid price, and you have your cash next day.
Right. But like if you see from an industry perspective, right? Like I've heard a lot of even asset management companies and people who are managing a lot of money, even they have some piece of it in gold because it looks like when the markets are going down, it's a hedge against those kind of things, right? So like I know you're saying don't have a lot of gold, but should you at least have some percentage of your assets in gold?
If you want to have gold, have physical gold,
Mm,
right? I don't believe in wealth managers. I don't believe in asset managers because their primary job is to make things look very complex to you
mm,
and shave fees.
right,
Look at all these ETFs, like gold ETF in the US itself, I think it's like 0.2 or 0.25% of AUM.
right.
So every year you're losing 0.25% to them, irrespective gold did
Right.
anything or not. At least physical bar at your gold is not losing value,
Yeah, makes sense.
right? If you believe in gold, by all means, but
Mm,
don't fall for paper gold. Do not buy physical gold. Take custody, take security,
mm,
and do it. Just like land. Like, would you just buy a piece of land on paper and not actually have custody of that land? No, right?
yeah.
So
Okay,
why
I
would you
think
do that with gold?
let's talk a little bit more on that. Like, what about real estate? Like, do you think that should play a part in your asset allocation?
Yes, but in my mind, real estate, it plays two roles. One, it basically does what fixed income, debt does, or bonds do, right? Bond, debt, same thing. They generate income
Hmm.
and they provide some level of stability to the overall portfolio,
Right.
right? Guess what? More than stability,
Hmm.
what is more effective is that income,
Hmm.
right? If you have a fixed, consistent income,
Hmm.
your portfolio can go and up and down. It doesn't matter. Like, why, when you are young and when you have active income and you're not reliant on your portfolio,
Hmm.
the reason is you have an income. If portfolio goes down 30%, 2 years later, it'll be up 50%. Who cares?
Right.
Right? It has happened so many times. So that is one part where it can replace the bond part,
Hmm.
right? The second thing it does is it provides you location independence. I would never buy real estate in one location. Like, I
Hmm.
have a lot of friends who buy like 5 units in close proximity.
Hmm.
If something goes wrong in that area, what would you do? Where would you go?
Yeah, I had a similar question, right? So going back to your point where let's say whatever is happening in the Middle East right now, you said taking out gold is difficult, but let's say you have real estate there, that itself is going to be even more difficult, right? I can liquidate all my stocks later and things like that and transfer the money. But what about the real estate that I have there?
Great. This is a very good question. And that's the reason I would never go 100% real estate. The key thing here is real estate is a liquid asset. So I would never go 100% real estate. In my mind, I've only been, if you look at the 60/40 portfolio,
Hmm.
so I've replaced some part of this 40 with real estate. So if you look at my portfolio, my real estate would be about 30%. Yeah.
Okay. So now that you're talking about your asset allocation, let's complete that piece, right?
Yeah.
60% and 40%.
30% is traditional 60/40 portfolio is 60% equity, 40% bonds. That has been a portfolio, at least in the US, that has been time tested, has weathered any kind of market for 30 plus year. Bengen was the study. Bengen was the guy who did the study, who came up with the 4% rule. Like, very
Right.
recently, he revised that rule to 4.7%,
Right.
right? But that was predetermined on the
Hmm.
60/40 portfolio. Before we go further into it, there's another point I would want to make about like why I don't believe in bonds anymore. So I don't know how many people actually observed it, but at least in the US, since 2022,
Hmm.
bonds have crashed over 50%. In 2022, equity went down, bonds went down faster
Hmm.
because of interest rate risk. People
Right.
don't understand it. When Fed increases the interest rate, bond prices crash.
Mm.
Right? So in the whole idea of 60-40 portfolio where bonds provide you hedge against downfalls, in 2022, it was more like a, correlation one kind of an event where everything went down. Gold went down, real estate went down, equities went down, Bitcoin went down, like everything was down.
Right.
So like what hedge did it provide me? Absolutely nothing.
Mm.
What I did was I basically revised that,
Mm.
said 60% is equity,
Mm.
30% is real estate,
Mm.
10% is my play money.
Right.
This 10% is what I put my hands into Bitcoin, and there is a reason why I put 10%, and now I can talk more about that. But I also do option selling, not option buying, option selling, because
Yeah. So I think
option
I
selling.
wanted to get more into that, right? Like I know you're a big believer in Bitcoin. So let's start with Bitcoin and then, or maybe we can start with option selling. And then I know you like to talk a lot about Bitcoin. So maybe that we can take it up later.
Sure, whichever way you want. I can very
Yeah.
quickly give a brief on option selling, and then we
Selling.
can
Yeah.
move over to Bitcoin. So I do option selling. Option selling is a way for me to generate income off of a sleeve of my portfolio. I never expose my entire portfolio. I've taken a small. So if you look at the equity for a moment, let's believe Bitcoin is equity.
Okay.
So my portfolio split would be 70.
70/30.
So in this 70%, there is
Just to
some Bitcoin.
clarify one, the 60% is totally in index funds. There is no other type of equity
Practically
there.
index fund. There are some RSUs from my past jobs,
Got it.
which I have to slowly divest as my incomes have dropped significantly now. So
Okay.
I have to now start divesting from them and go back to index funds or Bitcoin as I deem fit.
Sure. Yeah. Sorry. You can go back to the
So in
options.
this 70%, there's Bitcoin, rest is index funds, and there is a
Mm.
small portion where I basically write options like covered
Mm.
calls or cash secured puts, just
Okay.
to generate income that help me with my monthly expenses.
Sorry, I'm very new to this term. So if you can explain that like a 5-year
Sure.
old.
So do you know what option is or what option
No.
contracts are?
No.
So option contracts, essentially they're derivatives. Option contract is basically a right to buy or a right to sell. Right to buy is a call option. Right to
Okay.
sell is a put option.
Okay.
When I say I sell options, so if I'm selling a call, I'm selling a right to buy. So let's say
Mm.
Apple share, right?
Okay.
Each contract, at least in the US, is 100 shares. So let's say if I have 100 shares of Apple,
Okay.
I can sell one contract on that,
Mm.
one call option. And I don't know what the price is, but let's say price is 250.
Mm.
I can basically say 30 days from now, you can buy Apple shares from me at the price of 275.
Mm.
And for that right, you will pay me whatever $1-2 per share times 100, because 100 shares, I will get $100-200 today, which is for
Mm.
me to keep.
Okay.
If at the end of this period, 30 days, if the price of Apple share is more than 275, I
Mm.
have to sell to you at 275 because we entered into this contract.
Got it.
For me, it's a binding. For you, it's an option because you bought it, I sold it.
Mm.
If the price is lower than 275,
Mm.
then if you were a buyer, you would say, I would buy it from the market. Why would I buy it into
Mm.
275?
Right.
So my hope is the price won't go above 275. Your hope is price would go far above 275.
Okay.
So that's essentially the nutshell.
But
Similarly,
if
there's a
it
put option. Go ahead.
but if it goes below 275, then I have to buy it from you, right? Because we entered
No,
a contract
because
on
you
that
have an
stock.
option. For you, it's an
Oh, okay.
option. You have a choice. You can, you
Okay.
cannot.
Okay.
I
Okay.
don't
But
have a
you
choice.
have
If
to
you
sell it.
want to buy, I have to sell,
Okay. Makes sense.
right? But in order to do that, I get that premium. So in very simplest term, you remember, you talked about LIC, right? Like, what does LIC do? LIC says, for 20 years, every year you're going to pay me 50,000 rupees. If you die within 20 years, we're
Mm.
going to pay your family 1 crore,
Mm.
right? If
Right.
not, we'll pay you back something, but not everything that you paid,
Mm.
right?
Right.
Both of you, so in your mind, you are paying this premium, hoping that if something happens to you, your family will get paid.
Right.
Insurance companies betting on you're not going to die in 20 years.
Mm.
They get to keep everything.
Right.
Exact same play in simplest
Okay.
word,
Okay. Now it makes
right?
more sense.
But
Yeah.
but as an option seller,
Mm.
my risk is defined,
Mm.
right? In this case, my
Right.
risk is defined in the sense I had Apple shares at 250.
Mm.
I have capped it at 275. I cannot make
Mm.
more money if the share goes above 275,
Right.
but I will still be in profit. I still
Right.
be able to bridge this gap plus the
Right.
premium that I collected. For an option buyer, their risk is defined too. They will lose the premium. So, for example, the Apple share closed at 274. You will lose the
Mm.
$2 that you gave me per share,
Right.
right?
Yeah.
But
Makes
if
sense.
you study the options, if you study the skewness and whatnot, majority of the times, majority of the options expire worthless. So option
Okay.
sellers make money and option buyers lose money,
Mm. Okay.
right? So that's essentially the idea.
Got it.
So that's what I'm learning, and I'm trying my hands on just to generate some extra income.
Got it. Okay. So option selling is done. Now the
Yep.
Bitcoin part.
So coming to Bitcoin, I'm a firm believer in Bitcoin, right? I'm a firm believer in Bitcoin because it solves the problems of money
Mm.
that humankind has been wanting to get solved, but have
Mm.
never solved.
Mm.
What do I mean by that?
Mm.
For everything in world except money, we have a standard defined unit of measurement.
Right.
Temperature, you have Celsius, you have Fahrenheit, but 1 Celsius is 1 Celsius.
Mm.
100 years ago, 100 years from now, today is the same value.
Right.
Height, length, weight, everything has a standard unit of measurement.
Mm.
But money is something that is not standard. Like, why is that $1 today
Mm.
is not same as $1 tomorrow? Because its purchasing power has gone down, right? And the prime reason, like people say all the bullshit about inflation. Inflation is good, Keynesian economics and whatnot.
Mm.
Inflation is terrible. And real inflation is not the number that governments
Mm.
print or the government show. The actual number of actual inflation is the amount of debasement. What does debasement mean? Every government in the world is printing money, right? If you just look at the chart of money supply, just go
Mm.
search for US M2,
Mm.
India M2.
Mm.
They're like hockey stick charts. It looks like you're looking at Nvidia chart for last 5 years.
Mm.
It goes up like this, straight
Mm.
line, right? In the US, for last 50, 60 years, the debasement rate is about 7%, plus the 2 or 3% CPI number they basically say.
And that's every year.
Every year, on an average. Your inflation, actual inflation rate is about 9 to 10%, not 7%, or not 2% that they talk about.
Mm.
And that's the reason you see everything is a lot more expensive than it was 5 years ago,
Mm.
right? There is a reason why homes in the US have doubled in last 5 years
Mm.
in most of the country.
So
But
I want to
nobody
understand a
talks
little
about
bit
that.
more on this. So you say debasement is 7%, but what does that actually mean? Like when you say 7 plus 2, what does that mean?
Let's talk about this. Let's say you had $10, like 10 $1 notes, and world has only one product to sell.
Okay.
Let's say that's an apple, not the Apple
Okay.
phone, the apple, the one that you eat. So
Okay.
there are 10 apples, $10.
Hmm.
That's all that exists in the world. In this world, each dollar will cost $1. Each apple will cost $1.
Right.
Now suddenly, number of apple is same,
Hmm.
but somebody throws in 10 more dollars in the
Hmm.
mix. Now suddenly you say, you know what? Oh, I can pay $2 for each apple. Big deal.
Right.
Somebody throws in 10 more.
Hmm.
Suddenly it goes 3.
Hmm.
So the basic law of economics, the law of supply and demand,
Hmm.
if the supply of if the supply of something increases and demand stays constant,
Hmm.
the price of that thing decreases. So in this case, what is happening is the number of dollars in the market that are trying to chase the same amount of assets is fixed. Right? So assets are fixed, number of dollars is increasing. So purchasing power of each dollar is going down. But because we use dollar as a measuring stick, or Indian rupee if you're in India, you think everything else is going up. No.
Got it.
What is happening is purchasing power of your currency is going down. That's a debasement.
Okay. And then how does Bitcoin come into this?
So the big difference with Bitcoin is Bitcoin brings to the world true scarcity. Why is something valuable? Because of scarcity. Like why is a villa on Juhu Beach is more expensive than a condo in, a middle of a town in Baroda, for an example. The main reason is there is only so much land which is sea facing that you can build on. If there's a house that is built on, that'll be more expensive.
Right.
If there's a apartment in middle of a city or in middle of nowhere, you can build many, many more. So scarcity goes down. And that is also the reason why gold is more valuable than silver, than iron, copper, whatnot, because we believe gold is more scarce.
Okay.
But none of these things have true scarcity. Nobody can tell you today how much gold there is in total on this planet. There are estimates, but nobody knows for a fact. But for Bitcoin, we can tell you, we can mathematically prove it. There would never be more than 21. And 20 million out of those are already in circulation.
Right.
So only less than 5% are left to be mined, but everything else is in circulation. So first time humans have seen true scarcity. True scarcity backed by math. Math doesn't lie.
Right.
So that's one dimension. The second dimension is Bitcoin solves all the problems that gold could not solve. What do I mean by that? In the last century, because of communication, the trade evolved. Trade started to happen at the speed of light. Right? You could enter into, for example, you and I, we are sitting thousands of miles apart, but we are having this conversation in real time.
Right.
Thanks to technology. You and I can agree in a contract to buy or sell something as well. But I cannot send you gold at speed of light.
Right.
Because of that gap, the whole idea of this electronic ledgers, these trusted third parties, the rise of Visas, MasterCards, and Amex happened, and the SWIFT network and whatnot, right?
Okay.
So Bitcoin solves that problem. You don't need anybody else. It runs on a network, just like a protocol, is one use case that it can settle it. So the basic thing it solved is it solved the problem of moving value electronically.
Okay. So if we were able to sell gold at the speed of Bitcoin, then maybe that we would have solved this problem a
Then
while
we would
ago.
have never needed this thing.
Okay.
Gold was money for 5,000 years. I don't know how much you know the history.
Yeah.
Like up until 1933, so I'll tell you a little bit of US history for anybody who's interested. Up until gold was money. Even in early 1900s, dollar was backed by gold.
Right.
Then few things happened. In 1933, FDR, Franklin D. Roosevelt, who was the president of the United States, he signed Article 6102, which basically made any American holding more than $100 worth of gold at that time illegal. Illegal. They basically said you have to come and surrender your gold and convert it to cash, right? Once you did that, they immediately revalued gold. Gold was something at, I think, $18, $19. They revalued it to like $40, something like that, or $33, something like that. I don't remember the exact numbers. But they can read, search for Article 6102, you'll find the whole thing. Then in 1971, President Nixon basically came on TV, August 15, 1971. I remember this date because of India's Independence Day. He came and basically said, from now on, dollar is not backed by gold. Think of it like, you probably were in India when demonetization happened.
Right.
Modi came on the TV and said, from tonight, these notes are no longer valid.
Right.
How can one person, one party, one government completely devalue you overnight?
Mm.
So Bitcoin solves that. Bitcoin basically says, don't trust, verify.
Okay. So I think I want to get into a little bit about family and how did they think about fire, because I know it, like initially you said that one of the most important thing is to have your partner be aligned with your goals, right? So how did that conversation take place with your kids, your wife, I don't know, your parents and the people around you?
I think the most important person here is your life partner, because you guys are, joined together in this journey. So I don't think it's my goals, their goals, it's our goals, right? So it was never, hey, I want to do this. It was more about, okay, what kind of life do we want? So for example, right, if one partner say, I'm happy living in solitude, I want to go up in the mountains, completely remote, buy a
Mm,
piece of land, build a house, nobody sees me.
mm,
But the other partner says, no, I want to live in the biggest city, most
mm,
happening place. If you guys are not aligned, forget fire. Not going to happen,
right.
right? You both have to agree to a similar life.
Mm,
So my wife and I, we've been talking for years, and we still talk. We still talk for hours every day.
mm,
What have we learned? How does it impact our plans? What do we want to do? I tried this. I don't like this part. What do you think? Should we change it? We
mm,
talk about all this every day. The only thing is, in my mind, or at least both of us agree on this part, that we think of our plan as not written in stone.
mm,
It's just a guiding post.
right. Right.
My wife started building the business last year, April.
Mm,
So I saw what she was doing, and I kind of saw that how this is lining up with what we really want to do.
mm,
And as I said, I don't want to, like, none of us want to sit home all day binge watch, because if that
right.
happens, we'll probably go mad or die very soon.
Right.
Right. So we started with that, and that's when we started, building this whole the consulting plan B,
Mm.
so location freedom, global sovereignty kind of stuff.
Makes sense. Okay. So for somebody hearing this, what should people build before they quit? Financially, mentally, and strategically.
Know what you want to do after first beforehand, right?
Okay.
Don't say I'll figure it out.
Mm,
In my experience, the people I have seen, again, I've not met many, I'll be honest, I've not met many people who have taken early retirements,
mm,
but people who said, I'm going to retire and I'm not going to do anything and I'll figure it out, you're not going to figure it out.
mm,
And 6 months, 12 months, maybe 18 months, you'll be back, at least looking for work. The second thing is make sure that you and your partner are aligned.
mm.
Don't surprise them.
Right.
Talk, hear them, address their concerns, share your concerns, share how you are feeling, why you're feeling that way,
Mm,
and kind of make that conversation healthy.
right.
The last but not the least, then if it eventually comes, is look back at your numbers based on the goals that you set up for yourself.
Mm,
Do the numbers make sense?
mm, right.
That's how I would position it.
Sounds good. So just one last thing, I was just listening to your podcast with your daughter, and then there were a lot of talks about AI and the stock market, and I know there were a few things that you had combined, but just one question out of it, right? Like the stock market exists partially because humans are inefficient at allocating capital, right? So if AI becomes dramatically better at forecasting and decision making and doing things on its own, could the stock market, as we know, become less relevant in the future?
I don't think so.
Yeah, I'm asking this because if somebody's planning for the future, right, I'm sure equity is a large chunk of their portfolio. And if somebody would come and tell me, oh, Mihir, in 25, 30 years, you will not even have a stock market, then how would I think about retirement?
Okay, so let me say a simple saying that somebody said to me, and that kind of blew my mind. And the saying goes, if you buy a stock and the company goes to zero, that's your problem. But if S&P 500 goes to zero, that's America's problem,
Right.
right? So US government is so highly financialized.
Mm,
There is no way S&P 500 would go to zero.
Mm.
Somebody might ask, oh, would all the companies in S&P 500 succeed? Hell no.
Mm. Mm.
AI would displace many.
Right.
I have no doubts about that. But the way S&P 500 is constructed,
Mm.
some companies will go out, the others will come in. It happens every quarter.
Right.
S&P 500 rebalances every quarter. They
Right.
take out the worst performers, they bring in the new contenders.
Mm.
So I don't see S&P 500 going to zero.
Mm.
But would AI displace many companies? Yes. A lot of what we are seeing for last actually started on Feb 5th when Anthropic announced co-work. Since then, the software stocks have been hammered.
Yeah.
Rightfully so. Rightfully so.
Right.
Again, not a financial advice, but the way I see the world is in future, in the world of AI, when the companies will be much, much, much leaner, all these companies that have built businesses on a subscription per seat license model,
Mm.
their revenues will decline.
Mm.
Or even if not decline, they will not grow. And don't forget, stock market rewards you for growth, not
Right.
for anything else.
Right.
If you're not growing, then nobody rewards you. As
Sense.
simple as that.
All right. Yeah, I think it was great talking to you, Jay. I think it's a wonderful episode. Thank you so much for this one. I think there were
Absolutely.
some great insights. I can't wait for people to hear this piece. So thank you so much.